Hey guys, and welcome to our first ever um, weekly market outlook. So, the idea behind tonight's video is to simply just do some analysis on some of the major pairs to get an idea of what we can expect in terms of the market in the week to come. So, we're going to start off this video looking at the dollar index. And as you guys may know, the dollar index is just a basket full of the major currency pairs all backed against or all going against the dollar. So I'm going to get right into it, starting off with the daily time frame. And if we look very carefully, what we can actually come and see is the fact that the market has been in this sideways movement ever since March of this year. Now, considering the fact that we had this very steep drop over here, the market has literally just kind of bouncing between this major resistance point over here and this major support zone over here. And currently, if we have a look and see how we had the candle close on Friday, we saw that we had a relatively good bullish candle closing. However, we're coming into this moving average over here. This is my 50 period moving average, which is currently acting as dynamic resistance alongside a fairly key level of resistance over here that we will be able to refine a lot more if we move over onto the 4 hour time frame. Now, bear in mind, guys, that I can understand why this may look a bit messy, why this may look a bit confusing. And also, I'm not using my pivots over here because the new pivot levels are only going to come in um, tonight around between 11 and 12 o'clock Central South African Central Time. So, essentially, I want to focus kind of just on the current technical information that I have at my disposal. And one of the first thing that kind of catches my eye is the fact that although we had this very nice run to the upside, I am very mindful of the fact that we've ran into quite a bit of resistance over here in the form of the EMAs, as well as this specific 990 resistance level here that we can kind of trace back onto the 4 hour time frame. And also, if we go ahead and get the fib involved, we can see that we have more or less a retracement between the 61.8 and the 50% retracement. Now, one can argue that if we were to move it a bit down, then we had a 61.8% retracement fib. And if you were to take it all the way from there, then you kind of in between the two. So you can make the decision, but ultimately, what we are saying is that it's not, I wouldn't say it's coincidental to see the market kind of stalling around this level, because usually what we can kind of draw from that is the fact that we could see a potential reversal all the way back to the downside, possibly wanting to come and test this key support zone over here. If we were to go ahead and jump over onto our hourly time frame, then what we can see is bearish divergence. Okay, that's one of the key things that kind of highlights over here. We have this divergences over here, and with the market potentially wanting to want to run most probably to these prior highs over here, lining up with this 50 period moving average, and if not going further down. Now, obviously, guys, this could be a case where the market may want to use this as an opportunity to build a bit more momentum all the way up to this key resistance level over here, which is definitely on the cards, considering the fact that on the short term we have a little bit of a bullish run, but we still in a lot of resistance. And so, if the market does in fact want to break this moving average over here, break this key level of resistance, then it confirms that it does in fact want to build a bit of momentum to these highs over here, which is the 100.50, and then we can see the market kind of retesting these highs all the way up over here. But for the most part, as it stands, I mean, we had a very nice call it a falling wedge type pattern, or a descending channel, which had a very nice breakout to the upside. And so what you can kind of see is that if the market does in fact make its way all the way down to this section over here, then we would have a reasonably decent retracement level. If we were to measure from the low to the high, we would kind of retrace around 50%, which could see us continuing running further up. Now, bear in mind, guys, I'm not saying that this is going to happen. I'm just saying that based on the current market structure, this is the potential outcomes that the market could give us for the week ahead. So if we do have a successful break of these resistance levels over here, and if I was to kind of be more specific, if we were to kind of break these levels of resistance over here, then it kind of proves that the market does in fact have intentions of wanting to build more momentum to the upside, thus possibly wanting to test these highs all the way up over here, which implies that we could see a stronger dollar for the week ahead. Now, if the market decides that this is going to be a case where we have relevant market exhaustion in terms of the buyers, then we could see the market kind of rolling over and possibly wanting to test these lows over here in this key 4 hour support zone or the daily support zone, which will see the dollar obviously getting weaker. And so we are kind of faced between the two. So how we can kind of identify this is if we have any candlestick reversal patterns forming on this level, then that obviously increases the probability of the market wanting to kind of reverse over. However, if we break this with a very solid bullish candle, then that implies that we definitely have the potential to see these resistance levels over here being tested. So that's the dollar index. Let's go ahead and jump over to our next pair. Okay, guys, so continuing from the dollar index, we coming over to our next pair, which is the Australian dollar US dollar. And this has been a pair that has literally been kind of giving me the run for my money as I constantly try to call the top of this market only to get stopped out and eventually so that we have a very nice daily rising wedge pattern over here, which is a very strong indication of the market wanting to reverse further to the downside. Now, bear in mind that not only do we have the rising wedge pattern, but we also have bearish divergence as well, which supports the move to the downside, possibly wanting to test the 50 period moving average on the daily time frame. Now, if we go over onto the 4 hourly time frames, what we can see is the market has actually come and found dynamic support on the 4 hour 50 period moving average and started to kind of build a little bit of momentum, testing the 38.2 4 hour retracement fib. Now we can refine this a lot more when we go on over onto the hourly time frames, but I would argue that the market is actually wanting to break further to the downside, even though if we were to measure from this key low over here, excuse me, wrong tool. If we were to measure from this key low point over here to that key high point, that is actually a beautiful 50% market retracement. Now, that is if we were to remove this fib level over here, that fib retracement over here, then what we have is a very nice trend retracement, 50% lining up with the 50 period moving average, and this does in fact have the potential to move further to the upside, considering the fact that we have the moving averages kind of guiding price further to the upside. But I'm torn between the idea of the market actually running further to the upside, considering the fact that we have a daily rising wedge pattern. So there's a few things that could come out of this. Is that if we do in fact see the market building enough momentum to run further to the upside, then the following could be considered. We could see the market potentially want to run all the way up like this over here to test this high over here, forming a double top. That in and of itself could also support the idea of the market wanting to drop further down, thus breaking the overall daily rising wedge pattern. Alternatively, we could see the market rising all the way up and actually give us a third touch at the top of the overall corrective pattern, which will see the market potentially dropping further down. Now, those are all options that we have at our disposal based on the fact that we currently retrace 50% on the 4 hourly time frame from the most recent swing low to the most recent swing high, alongside being supported by the 50 period moving average as well as the other moving averages kind of guiding price further to the upside. Now, if we go over into the hourly time frame, what we can actually see is the market is in between a rock and a hard place. On the 4 hourly time frame, what we had was a very nice 50 period moving average acting as beautiful dynamic support, lining up with a 4 hour 50 period, sorry, with a 4 hour 50% retracement. Now, if we go over to the 1 hour time frame, what we're seeing that if the market is in fact going to run all the way to these highs over here or possibly test the top of the rising wedge, it's going to have to break this section over here. And this is where we have dynamic resistance coming in. Because bear in mind, guys, now that we have the 50 period moving average kind of pointing to the downside, and this implies that the last 50 candles in fact closed bearish, which tells us that we do have a potential shift in market momentum. Now, this obviously has to be considered in great detail, but what we can in fact see is the market may want to build a little bit of momentum to these EMAs and possibly test it as resistance and then move further to the downside. But if we do have a successful break of these key levels of dynamic resistance, then ultimately that confirms the direction of the market potentially wanting to test this high over here, forming the double top to basically potentially, I'd say, form candlestick formation in terms of a reversal signal. and then see the market go further down, or it may want to, in fact, test the overall corrective pattern in the form of this rising wedge over here. So what we're saying is that in order for us to be convinced of either or, we will have to see the market actually break the hourly dynamic resistance to confirm direction. Alternatively, we can see the hourly dynamic resistance act as the catalyst to see the market going further down. But the catalyst to see the market going further up will actually be found on the 4 hourly time frame, as this is a very nice um, fold of confluence to support the bias of the market actually looking to increase in value. So that is the Australian dollar, US dollar. Let's go ahead and jump over to our next pair, and we will have a look and see what the market has to say about that. Okay, guys, so we're jumping over onto the euro dollar, and this pair is highly inversely correlated with the dollar index, as the euro makes up the bulk of the basket of the dollar index. And essentially, what we had was, if we go over onto the daily time frame, we can actually see that the market, like on the dollar index, was also ranging at the top. We have the euro dollar ranging at the bottom. So we had the market kind of bounce between this key level of resistance and this key level of support. And on Thursday, we had a very nice high test candle, testing this moving average over here and actually being the catalyst for seeing the market drop further to the downside by kind of catching the 50 period moving average on the daily time frame to potentially stall. Now, bear in mind that if we were to measure from the most recent swing low to the most recent swing high, that is in fact a 50% retracement. Now, the question that we have to ask ourselves is, will this actually mean that we could see the market building further momentum to the upside, or does it mean that we can see the market continuing moving to the downside? Now, we can't even call this bearish divergence because we have the market kind of just literally moving in this sideways fashion. Now, one of the things that you also want to be mindful of when the market is in a corrective phase, or when it's moving sideways to be more specific, the moving averages doesn't really carry that much relevance, only because of the fact that the candlesticks itself is not giving clear direction. The moving averages has a greater impact on the market when it has a trend going. But nevertheless, be that as it may, what we can actually see here is that over here we had the market giving us this 50% retracement. And we are kind of supported by all three moving averages acting as dynamic resistance to imply that the value of the euro could potentially want to build further to the upside. Now, that is also supported by the fact that we do have bullish divergence over here. And if we go over onto the hourly time frame, what we can actually see is that now we have short-term bullish divergence as well. Now, the thing is, I will beg the question as to how far could this market potentially go up. I would most probably look to take my first target over here, but that's on the hourly. And bear in mind, guys, um, I'm looking at this from a holistic perspective. And when I say that, I mean that either we're going to build enough momentum to kind of test these highs over here during the course of this week, and that could only be confirmed once the market has a confirmed break of the dynamic levels of resistance. And if we were to continue going further down, well, then we have to see the market actually break this level of dynamic support. So we are between a rock and a hard place. And I think the best thing to do is literally just wait for the market to show its hand before we make a move. And with that being said, I'm going to leave it there for the euro, and we're going to jump over onto our next currency pair. Okay, guys. So, with regards to our next currency pair, the pound dollar, I don't really like what this pair is doing. There's not much to report on it in terms of the technical aspects of this specific pair. The market is the market is literally being guided by this moving average very strongly. And I personally, in order for me to see any opportunity in this market, I would have to see a break of this moving average over here, because we have all moving averages kind of pointing to the downside, kind of guiding price further and further down. And even if we go into the intradays, there's really not much happening over here. So, I mean, we're gonna have to wait and see with regards to what could potentially happen. We do, however, have price stalling on this 61.8% retracement level over here. And if we were to look at it overall, we have this kind of falling wedge pattern, which could suggest that we have the potential of seeing the market break further to the upside. But I don't like to take these positions purely because of the fact that number one, we don't have a secure level of support, and number two, we don't even have candlestick formation to suggest that we have the potential of reversing to the upside. So, if anything, I could see this market continuing to come further down, to potentially form a double bottom, and that's going to be where I could possibly see some value coming out of this trade. So, not much to report on the pound. Let's go ahead and move over onto our next currency pair. Okay, guys. So, with regards to the USD CAD, so the CAD, the dollar CAD has been a very, very choppy pair for the longest time now. We had a very nice break to the downside. Overall, if we were to look at this from a holistic perspective, this is a very nice bullish flag that we have over here. And we just have price kind of bouncing between this downward sloping trend line and this key support level over here. If we were to go over into our intraday time frames, what we can actually see is the fact that the market has in fact given us a bit of a retracement and has come back down to use the moving averages as dynamic resistance. Not only that, we do have bearish divergence, implying that we could see the price of the market actually drop further down. And if we go over into the hourly time frames, what we can see is that the market did in fact give us a very nice break and possible retest of this moving average over here. This would be one of those positions that I take at a very short scale, where I will enter over here and possibly take profit over here with this prior highs, as I do see the potential of the market overall wanting to build further momentum to the upside. But as it stands, I kind of just see a short term sell over here, I suppose. But that obviously remains to be seen, um, as the overall structure of the market implies that we do have the potential of actually wanting to break further to the upside. Now, bear in mind, if we do have a break outside of this downward sloping trend line, then we have a confirmed run to see the market potentially test back all the way up over to these highs over here. And if obviously we break this key support level, then we're definitely looking to make lower lows, implying that the market definitely looking to reverse in direction. Now, I am also aware of the fact that if the market does want to build a bit of momentum, then this most probably will be the level that it's going to want to test. And it's going to actually find the most problems at this level, because not only will this be regarded as the double top, but it will also line up with a downward sloping trend line. If price was to move from this level all the way up over here, that will ultimately be a double top testing the downward sloping trend line. That is just so much resistance that I don't necessarily see the market breaking through it as per se. But if it does, then you definitely know that that's a strong confirmation of direction. But we'll leave it there for the USD CAD. Let's go on to our final pair. Okay, guys. So this is our final pair, which is the dollar yen, and the dollar yen is in this very nice upward sloping, sorry, not upward sloping trend line. This very nice rising wedge pattern over here. And if we were to zoom in just a slight bit, we do have a bit of a bearish divergence on the daily time frame, and then we also have the moving averages coming in and acting as a very strong dynamic resistance. Now, these are all very strong reversal signals, indicating that we could potentially see the market run all the way to the downside. Now, how far down? If the market was to drop, I would kind of keep my eye at around this point of the year, as this would be the most recent low on the daily time frame. If we scale over into the 4 hourly time frame, what we're looking at is the market has really been using this upward sloping trend line as a very, very strong type 2 support. And all I'll be looking for is the market to actually break through this level over here, suggesting that we have a confirmed break to the downside, and this is going to be where we're going to start to see the drop in the price. So going over onto the hourly time frame, I can actually see the market really being squeezed in terms of using this dynamic level of resistance. We have it's showing a little bit of deceleration here as well, and this could be the catalyst to kind of see the market at least giving us a nice solid candle through this upward sloping trend line, which will definitely give me enough confirmation to see the market at least wanting to test this 4 hourly support structure over here. A break below the support structure over here will definitely see me running the position all the way down to the start of the rising wedge pattern. So my bias for this pair is very simple. I'm actually looking for the price to actually drop further down, but I am mindful that if we were to connect these highs over here, we're kind of in this triangle, which implies that we could see the market have a possible attempt of wanting to break up all the way like that, giving us the 1, 2, 3 touch to then in fact drop further to the downside. But as it stands, my bias is if we see the market run up, we could see the market wanting to test the top of this downward sloping trend line and then drop. Alternatively, we could continue using the moving averages as dynamic resistance, and kind of just see the market drop from there on out. So, guys, I really hope that we were able to cover everything. I didn't want to take too much of your evening. I didn't want to have you watch this video for too long, but essentially, I really wanted to cover the most obvious and most impactful signals that the market is giving us. And bear in mind, this is just a forecast. I'm not saying that this is going to happen. I'm just looking at the charts from a technical perspective, and kind of evaluating all of the possible outcomes. However, if you guys have any questions, please feel free to comment below. I'm more than happy to answer any questions or even to hear your feedback, guys. I would really appreciate that. But for the most part, I hope that you guys have an awesome, awesome week. I will be uploading some more content during the course of the week. But for now, I hope that you have a brilliant evening further, and I look forward to chatting to you all soon. Cheers and bye for now.